everyone, and welcome back to this week's edition of the Grain Gauntlet. As always, we will be answering 5 grain market-related questions coming from our firm clients as well as potential prospects. My name's Kayla. This is Pat.
Shout out to Josh, who's on vacation in Vegas.
Yes. Ready to get started? Yep. All right. So how soon will most of the harvest pressure be hitting the markets?
Wow, it's usually hits it at the hardest 50% through. I would say this week, next week will be at that level. Well, of course, we won't know because there's no government reports, but the market's going to guess that within 2 to 3 weeks, the majority of harvest pressure usually hits, and we start to rebound about 50% through harvest. However, this year, we could stay low for prices for a while because we definitely have a glut of corn in the marketplace, which takes up way more bin space than 52 bushels of beans when you have 180 plus bushels of corn. So it might be prolonged, it might stay really bearish or at least flat with prices till mid-November.
Okay. All right. What can I do in my hedge account when prices are mostly sideways?
Good question. Don't buy puts because puts will depreciate rapidly. In fact, if you look at option value right now, there's no value it bought in puts or calls. So the best thing to do is buy a cheap call and sell a futures. That way you can pull that futures at any time and the calls are cheap. So you don't miss a lot. For example, you could probably buy a 420 call at the money call for less than a dime or so and have a short futures. Below 410, you're making penny or penny.
Yeah. Okay, how will the government shutdown affect prices for corn and soybeans?
Bearishly. Unknowns, the more unknown in marketplace, the more people unwilling to put the money into the market. That means people will not enter to get excited on the bull side. When you're not excited on both sides, the market usually slips slower.
Okay. If the federal government does provide aid to farmers, will it help ease some of the harvest pressure?
Yeah, big time. If you guys have enough money for cash flow, you're going to have to make sales to get cash flow. There'll be less sales made because this price is pathetic. Okay. We'll wait like we did last year. We had profitable price before the bin doors unlocked. That's all though after harvest pressure is gone and the stuff that has to be moved because there's no bin space on the farm is taken care of.
Okay. This one is from a potential prospect, and it is, what are the potential new sources of export demand for the U.S. soybean farmers?
That's a really good question. Okay, because I don't know. Okay, that's why it's a really good question. Outside of China, who imports about 112 million metric tons, which equates to about 4.1 billion bushels. The next 11 countries import 53 million metric tons, which is about 2 billion. So if we got all the other countries that import beans, the top 11, we'd be fine. We'd be excellent, okay? And could that happen when we get the vast majority of every other country that imports soybeans except for China? Yeah, we could, because our beans could be considerably cheaper than Brazil's beans because China's buying them all up. So it's kind of like a little bit of a shell game. But there are buyers out there. There's 11 other countries that buy a good amount of beans. They equal up to 53 million metric tons or 2 billion bushels. We don't need more than 2 billion bushels of export demand to be in really good shape. It's going to be price, and it's going to be at some point a deal with China because China knows they're going to have to buy some U.S. beans. The price is going to be too low otherwise, and they're going to be getting ripped off by Brazil.
Okay. All right, guys. Well, that's all we have for this week with questions. Again, if you do have questions, you can always email them to us at adminstaff@hedgeplus.com.
Have a great week. Thank you. Stay safe.